Good morning, everyone. Welcome to this fireside chat. And today we are very honored to have Larry Fink, the chairman and CEO of BlackRock, to join us to share his thoughts about fintech and green. Thanks very much, Larry, for joining us. And I know that these two subjects are very close to your heart. So let me start with digitalization. In the last 2 years, our life have been turned upside down by COVID. And in fact, we're now a lot more used to the new normal of conducting our business through digital means, like what we're doing now. And I think this digital appetite will likely continue even after the pandemic. And so it's likely to be a structural change. In fact, in Hong Kong, we are seeing quite a clear change in people's behavior with quite a sharp rise in digital payments and also in online shopping. So Larry, from your experience in driving digital transformation, how do you think technology can help financial institutions serve their customers better through this structural change of having to interact more digitally? And also, how do you think financial institutions can make the best use of the opportunities arising from this trend?
Well, first of all, Eddie, really good to see you. I'm looking forward to the moment when I can physically see you and give you a big physical hug. It's been too long. It's been too long for me to even be in Hong Kong. So I'm looking forward to being in Hong Kong and then ultimately to the mainland. So maybe another time. So big question and a big answer. Technology is changing how we live. It's actually improving how we live in most cases. It allows us to have more time, more flexibility. It allows us to be more connected. It serves humanity in so many ways. I mean, can you imagine not having a smartphone today? And really, what was it, 12, 14 years ago, we developed the smartphone. And could you imagine a world, a COVID world without Zoom? These are just two examples of how our lives have been enhanced. I think if we did not have these technologies and we had COVID, we would have a whole different outcome, and we'd be talking about many different things. Now, let's be clear. Technology is enhancing all the world, but also technology is creating more economies doing very well and some economies doing a lot poorer. And so you're seeing through technology very rapid advancements for some of the developed countries, and you're seeing many of the parts of the world that have not been able to advance through technology in the same speed, and so we're seeing a wider gap. And we are also seeing a wider gap in every society between the rich and the poor, and those are things we just need to contemplate while we are so optimistic about technology. So, as I said, technology simplifies. And how you framed the question, everything that you said, whether it's a digital wallet, whether it's everything we do, it's making your life simpler. It's making your life more connected. And with COVID, when we have been our lives have so changed and so fundamentally different, we needed to find different ways to be connected. And quite frankly, here we are almost 2 years into COVID. And the economy has done quite well. Obviously, a lot of central bank monetary policy accommodation, very large fiscal stimulus by many governments. And so that obviously was a foundation to lift everything. But so many parts of the world and so many people have done so well because of technology. And in fintech or in financial services, I don't think we've done enough, but we're moving very rapidly. What do I mean by that? Obviously, we're allowing consumers to consume much easier through a digital wallet. Through technology, we are allowed to be closer to our clients. Through technology, we can help our clients navigate. Hopefully, which we haven't done yet, and this is one of the big issues for me related to fintech and financial services, we must use technology to bring up and elevate financial literacy. We are still not doing an adequate job to provide adequacy to all our clients in terms of understanding the pathway for having a a robust life after retirement. And so there are many things we need to do related to technology and fintech. Those are the wonderful opportunities. Those are the wonderful things. Technology to help people have a simpler life, a more robust life. Technology has been a wonderful foundation, in my mind, why we've done so well, or why some of the countries have done so well during COVID. We were able to do many of the things that we do during normal time. We're not going back. We've learned from this, and we have many opportunities to really grow from this. And so this is one of the fundamental reasons why I'm bullish on humanity. I'm bullish on humanity because we solve problems. We solve problems to find ways of connecting, just like this Zoom video today. We solve problems in trying to advance the connectivity between banks and asset managers and insurance companies to their clients. We're using technology to really become better at what we do. And I do believe that's going to be the trend in the future. Now, one of the issues, though, Eddie, and we have this another societal issue. Obviously, technology creates a lot of unicorns, which is a wonderful side of it. And innovation is still critical. And so those who are educated, who have that ability to do those things, really have a better ability to advance. Those people who are not or undereducated are not as equipped. That's not always the case, but but that's generally the trend. And the other last thing that I would say is we need to use technology to find better ways to elevate all, bring everybody up, and not just those who are educated. And the last thing I would say about technology, you see in the market capitalizations of technology firms, and we're seeing a big gap between those firms who have very much advanced technology and the traditional companies. And so my conclusion to that for everybody in financial services, those who are in the traditional part of the financial services, they have to rapidly adjust their business model to utilizing more and more technology, to connecting more better to their clients.
Yeah, I fully agree with you, Larry, that when we talk about the benefits that fintech can bring to financial services, it's not really just about being more efficient, but it's also about fair financial services to all. This is in fact one of the main theme that we have when we encourage our financial sector to leverage technology as part of our FinTech 2025 strategy. Financial inclusion, provision of banking accounts to all at a low fee, and also provision of credit to SME through the better use of data is something that we are promoting. And we do believe that technology, especially fintech, will have the potential to be probably one of the most important drivers for growth in the post-pandemic world. And Larry, what do you see as the biggest opportunities for fintech? And also, how do you think fintech might revolutionize or disrupt the financial services in the post-pandemic world?
Well, let me talk about technology that no one talks about, a technology that is very close to what BlackRock is and where BlackRock is today and our growth over the last 11, 12 years. ETFs is a revolutionary technology change in the mutual fund business. People did not see that, did not understand it. What ETFs have done to the mutual fund industry is revolutionized it. Why? It's better for the end client. So when I think about anything fintech or any advancement, is it a better outcome for the end user? And so something like an ETF has so many more efficiencies than a mutual fund. So let me just start there, but use that as a framework. Technology and the advancement of technology is all about making it better for the end user, simplifying it for the end user, informing the end user, having the end user feeling more connected to their companies who they ask to provide services for them. And so there is no question we are going to see huge advancements in technology. and many things should not be unintended. They should be expected consequences. Too many times when people make a big change, and we see a big change in our ecosystem, whether it's a regulatory change or a change from technology, everybody says that 5 years later, look at these unintended consequences. I think there are too many unintended consequences. When we do these things, we should say, oh, we should have expected that. That's an intended consequence. But so digitization of a wallet is going to be really essential. As I said earlier, a fintech has to play an essential role in the financial literacy, so we have more financial inclusion.
Thank you, Larry. Well, let me now turn to another subject that I know you're extremely passionate about, which is about climate change and the growing importance of green and sustainable finance. BlackRock has been a very early advocate of ESG, and you're still at the forefront of promoting green and sustainability. And BlackRock is also one of the earliest to announce clear strategies on sustainability. And it's also one of the earliest to commit to net zero by 2050. And I've also read your 2021 letter to CEO. You describe this trend as a tectonic shift. And in Hong Kong, we're also working hard on green and sustainability. And one issue that seems to be key in taking this initiative forward is data availability.
Yes.
We're already seeing big progress with the formulation of the framework by TCFD, and also IFRS is working on the more detailed reporting standards that will be due out next year. And these are very useful first steps to address the issue of data availability. So how do you see the data issue in promoting green and sustainability, including the disclosure issue? And how do you think investors can make use of their current data to make more informed decisions and achieve better long-term results on green investing?
Eddie, let me tie what we were talking about related to technology and now green, because we are not going to get the proper analytics and data without investing in a lot of technology so we could analyze all the big data that we're going to have related to the transition. We believe technology, data analytics, models are going to be the key to properly analyze every company. We are excited about having more and more companies volunteer to report under SASB and TCFD. This is one of the big changes. This was not been forced by regulation, but more and more public companies believe it is their duty to be a part of this transition. So that's a really positive side about what we are seeing in the public markets today. Now, granted, there's a lot of pressure here and there, but they're moving forward. In fact, Eddie, I think public companies are moving faster than the rest of society. So we have taken a real technological approach at BlackRock to understand climate risk. And as I said in my report related to the tectonic shift, I've always stated that climate risk is investment risk. And so, okay, what does that mean? How do you quantify that? And how do you understand that? So we've taken a big, broad approach where we now have technology that allows us to use satellite imaging, overlaying models of climate change. And you could tweak the models, you could tweak what it means, and it will show where the physical climate risk is the greatest. You could, through these models, you could say, okay, where's the rising temperature? Where's the rising water tables? What does that do to that mortgage-backed security? Or what does that do to that commercial piece of real estate in Hong Kong? And so we are trying to use that as a foundational piece to overlay everything. The hard part of data and analytics is going to be analyzing every company, making sure we have a common taxonomy so we can analyze a Hong Kong company, a Chinese company, a New York-based company, a London-based company with the same metrics, the same measurements. This is going to be one of the big issues. Hopefully, when we are at COP26, we have government talking about a global taxonomy that we could all work and live with it. And through that global taxonomy, then, as more and more companies report under TCFD, And most probably more and more regulators, security regulators throughout the world are going to enforce that companies report. Then it's going to be big data analytics, try to understand how each company is moving forward. And so I think we are there. I think it's a really great opportunity. But I want to make sure that I also say in any climate transition, it is a transition. You know, it is not going from brown to green. It is going from dark brown to medium brown to light brown to a lighter brown to a very infinitesimal light green to a little lighter green to a medium green. Right now, we're living in a period of time with rising energy prices. As I just was recently in the Middle East hearing what they believe where energy prices are going. We are in the midst of a real supply shortage because as so many countries focused on climate risks, they focused on how do we mitigate supply without mitigating demand. And as we know, we've had a resounding uptick in the economic activities in the world, and now the demand for hydrocarbons is very high. In addition, what we need to be doing, and this is where we don't spend enough time talking about, we need to be employing large sums of money in the trillions to invest in the new technologies. So we reduce the green premium. And so then if we're going to have a just and fair transition, which right now I don't believe we're going to, unfortunately, I'm very fearful of that. And I don't believe that's a good outcome for the world. We have to invest in new technologies to bring down the green premium. So green technology is competitive to hydrocarbons. Now, it took 30 years to bring down the green premium for solar and wind. We don't have 30 years. So this is the issue. But right now, as we are, sitting here, we're very frightened about a real rise in energy costs. And obviously, we all know a rising energy cost has the greatest issues with the poor. They pay, as a percentage of their income, the highest percent for heating. And for gasoline or petrol or diesel. So we need to be aggressive. And this is another thing that we're trying to do at BlackRock. We want to make sure that everybody understands we're not going from brown to green. It is going to be a transition. But that's the data we want, getting back to the analytics. We really want to understand how companies moving forward. We believe companies have to continue to invest, but they should be forceful in how they're investing. What is the break even for them in their investments? As a shareholder, we want to know that. But we also want to know how they're moving forward in advancing green technology so we can bring down the green premium. So it's a very dynamic conversation, and it's a very real one, but it's not from brown to green.
I'm totally with you on the need to think about transition. And this is especially important for emerging markets, including Asia, where electricity supply is a very basic thing that people need. And you can't just cut off because you need to be completely green. So this transition, how to finance it, I think is something that collectively our ecosystem has to think about. And talking about collective efforts through different stakeholders, is a collective effort definitely for that is needed between asset managers, banks, the governments, academia, scientists, etc. And in what areas do you think the private sector and the governments can come together to do more in order that we can deliver a better future for our next generation?
And if I may, I'm going to say it a lot more forceful. We will not get to a net zero as a world if governments and the private sector doesn't come together. Governments have been forcefully using deficit financing in everything they're doing in many parts of the world. We don't have enough capacity in our deficits and our debt in the public sector to finance climate change. It has to be with the trillions and trillions and trillions of private capital. I can tell you right now, Eddie, clients worldwide are starving for good long-term investments. There's not enough of them. There's a big reason why more and more investors are going into more illiquid investments because obviously this with what $17 trillion of bonds below zero in terms of return, there is a reservoir of private capital that wants to invest, and we're wasting this time together, the world, in trying to find solutions. And so one of the things I believe we need to do, and I believe if we are going to get to a net zero without, and this is going to be one of my statements, at COP, everywhere else, the emerging world represents 34% of the hydrocarbons. This is without China. And as we all know, it's growing because they have these demands, they have rising populations in some parts. Right now, the world is providing the emerging world about $150 billion to move forward on green. It is estimated that they need $1 trillion a year if they're ever going to get green. That's a daunting a lot of money. But we have to reintroduce something that you and I lived with for most of our careers that is not as relevant today. We got to relive and rebuild multilateralism. We got to find a way that we are working together as a world. We need to really reimagine the role of the IMF and the World Bank. They have the greatest connections in the emerging world. The private capital is not going there because they can't navigate the political risks. It's very hard to invest in a brownfield investment there, a brand new investment, without having some understanding. And BlackRock, working with the French and German government, we launched something called the Climate Partnership, where those two governments are providing the first loss piece. And then we've raised a lot of money, and this is to finance climate risk and technology technology opportunities for Northern Africa, especially, so we could build, solar fields and other things like that to advance those economies. But that's what the World Bank and the IMF need to do. We need to have the equity owners. It's not up to the management team. They have a charter. The charter does not allow them in most cases to really be a first loss piece. And maybe the country of origin is the first loss piece, and then the IMF and the World Bank is the second tranche of that. And then there would be huge amounts of capital from the private sector. As I said, what we did with France and Germany, we had so much demand, we had to stop it. And the clients wanted OECD pricing. They didn't want emerging world pricing because we have the foundation of the capital from these countries. We need to be thoughtful about this now. We need to be rethinking this today. And I think we're going to get there, Eddie. I'm really optimistic we're going to get there. The question is, are we going to get there fast enough? I am absolutely optimistic we are going to get to a net zero. I can't tell you it's 2050 or 2100, though.
Well, the climate partnership that you described is absolutely essential in tranching risk for different risk owners who have different appetites. Governments can bear the first loss, whereas the market needs somebody to guarantee them for the first loss. So this is something that I think as investors, as asset managers, we can actually work together, plus the governments, the World Bank, so that we can see where we can go. But my last question has to be about Hong Kong. And you know that we are working hard on green technology. The main opportunities are very clear with the Wealth Connect already taking off. In the last few years, we want to make sure we've been working quite hard to make sure that Hong Kong stays at the forefront in these important global trends. So from a global investment perspective, what recommendations do you have for markets and international financial centers like Hong Kong so that we can be in the forefront on technology, sustainability, and green developments?
Well, first of all, Hong Kong plays an incredible role as really the world's gateway to the mainland. So Hong Kong is going to be that essential city, financial center that is going to be a part. And China Connect with Shanghai and Hong Kong is going to be very important. And so we look at Hong Kong continuingly to play an essential role in this. And as a leader, as a global leader, Hong Kong has to be very thoughtful about how it advances the fintech revolution for Hong Kong itself, and also be a part of that in the mainland. One of the things that we are working in the mainland, and that's how do we elevate retirement in the mainland China? As you know, there's not a real fundamentally strong retirement platform in the mainland, and so Hong Kong can provide that type of foundation and that gateway. And this is one thing that we are doing in the mainland, trying to elevate the whole concept of retirement savings instead of keeping all the money in bank accounts and a lot of speculation in real estate. And so, but Hong Kong has the intellectualism. It is a fantastic city that people want to congregate. There's only a few cities in the world, maybe people are going to hate me for that, but there's only some few cities that people really want to congregate, where you could have that gateway of bringing global finance together and redistribute it. And Hong Kong's one of those, and it's one of the dominant centers in Asia. And so Hong Kong plays an essential role. And this is why we are excited in our business in Hong Kong and the opportunities we have in Hong Kong. I am truly looking forward so I could be physically there in Hong Kong without a 21-day quarantine, but that's a whole nother story. But anyway,
we'll work on that.
Good. I will be there. But anyway, Hong Kong will be playing an essential role in all the development of technology, in its position related to China, the opportunities we have, and so I think Hong Kong is quite secure in that future.
Thank you very much, Larry, for your very candid and insightful sharing. And I've learned a lot, and I'm sure that the audience and also those online has also learned a lot from your sharing. And so this will come to the end of this session, and I would like to thank everyone for joining this chat, and I wish you have all enjoyed it, and I'll see you soon. Goodbye. Thank you.
Bye, everyone.
Thank you, Larry.
Bye, Eddie.